Hey, what's happening, guys? Good morning, everybody. You guys have tuned into Rules for Rebels. Today is Monday, December 19th, 2022. Got a bunch of stuff to talk about today. Going to be sharing a lot of business news and a lot of news about the economy. And we got a number of different things to talk about. One of kind of the overarching themes of today's video is the used car bubble. All the car repossessions happening. A lot of people who 2 years ago could afford their $500 car payment. With the cost of insurance going up, the cost of gas going up, the cost of groceries going up, the cost of rent going up, with the cost of everything else in people's lives going up, a lot of those people who could have afforded a $500 car payment 2 years ago are now struggling to afford those $500 car payments. And a lot of people who bought cars over the past 2 years when used cars surged 40%, 44%, even if they wanted to sell these cars, they can't get out from under these cars because they owe more than the car is worth. We're going to be talking a lot about that today. I think the average car payment is up over $700 now. A lot of people are spending over $1,000 a month on their car. What else are we going to be talking about? So Starbucks has recently added point of service tipping. When you swipe your credit card there, we're going to be talking about the TikTok ban. Gen Z finding that their digital footprint from their teens could prevent them from getting a job, and a whole lot more. So I guess without further ado, let's kind of hop into this. CNBC reports that car repossessions are on the rise. We see this as a warning sign for the economy and a huge barometer for the economy. In terms of the things that you least want to lose, or the things that are going to most affect your life if you lose them or have them repoed, are going to be your house and your car, right? Those are going to be the two things people want to keep. So behind your house, your car is the thing that you're going to want to lose the least, because then you won't be able to get back to work. If you have cash and you are in the market for a car, there could be some big opportunities and some huge sales on used cars in 2023. This is going to hurt a lot of people, because if you lose your car, how do you get your kids to school? How do you get to work? How do you go buy your groceries? Zero Hedge had an article about this titled, "The Perfect Storm Arrives, Massive Waves of Car Repos and Loan Defaults. The auto loan crisis signals a full-blown recession coming. Car prices have been one of the biggest drivers behind real estate, one of the biggest drivers of inflation, and used car prices, or just car prices in general, have been up 40% in the past 2 years. The average new car loan today is $40,155. The average interest rate is 6.5%. That's nearly doubled since the beginning of the year. And then on average, the average car loan is 60 months. But some people, again, are doing 72-month, 80-month loans. The average payment is up 26%. It's up over 25% just since 2019. And the average car payment right now is $713. You also have 1 in 6 people spending over $1,000 a month on vehicles. And keep in mind, it's not just cars that have gone up in price. Insurance has gone up in price. I think insurance went up 16% in the past year. Gas prices are up. The cost to repair a car is up. And that's on top of your groceries and everything else in your life costing more. We're starting to hear from repo companies that they can't keep up with demand. And whereas typically repo companies would have like a little lot behind their office, repo companies are now literally buying acreage to store all the cars that they plan on repossessing in 2023 and 2024. And we've been hearing from repo company owners that they expect business to stay busy through 2023 and even into 2024. Most repos are happening on those who 2 years ago could afford these cars, but with everything getting more expensive, they can no longer afford these big car payments. We also know that car valuations are plummeting. Some cars are down over 30%, and this could cause some banks to either collapse or have some trouble. The companies with the most exposure to auto loans are Ally, JP Morgan, Wells Fargo, Capital One, and Bank of America. So here's an interesting story. Starbucks has added a tipped prompt to their credit card machine. This is referred to as point of sale tipping. We've been seeing a lot of articles over the past couple years of tipping fatigue. I think I actually did a video talking about tipping fatigue and how tipping has gotten out of control. And I shared two stories that happened to me fairly recently. One, I went to a bowling alley, and after I got assigned my lane and went to pay for the bowling, it asked me if I wanted to tip the cashier at the bowling alley. And then the other one, I was at a concert back in the fall, and my girlfriend was buying a concert T-shirt for her uncle, and on top of overpaying for this $40 concert T-shirt, when the guy asks what shirt size you want and grabs a large from in front of him and hands it to us, he spins the iPad around, and it's asking for a 25% to 45% tip, literally for this guy handing us a T-shirt. So people, have tipping fatigue. People are frustrated. It's one thing if you go to a sit-down restaurant and, a server spends 45 minutes or an hour waiting on you. Obviously, you're going to tip them. But for somebody handing you a drink, for somebody ringing you up for something, does that really warrant a tip? And oddly enough, Starbucks was kind of the first fast food restaurant or coffee shop to start the whole tipping thing. They never had a prompt on their screens, but they would always have the tip jar out. And it always seemed kind of more normal to tip a Starbucks worker than, say, a McDonald's drive-thru worker. But Starbucks had never added the point of sale tipping to their registers. And actually, it was this past weekend. Me and my girlfriend were out and about, and I had a craving for a coffee. Normally, I've been getting my coffee at home lately. But we went through a Starbucks drive-thru, and the girl was like, "Oh, it's going to ask you a question," and she spins the credit card machine over to my girlfriend, and it's asking for a tip. So I happened to Google this. There's a lot of people online bitching about it, but it's I guess this has actually been in effect since November. I just hadn't been to a Starbucks since then. But what are some of your guys' craziest stories about this recent surge in tipping, point of sale tipping? What's some of the most ridiculous ones that you've seen or been prompted for? And what do you guys think about tipping culture overall? We've learned that something like 68% of Americans wish that restaurants would just pay their employees better and we could kind of get done with the whole tipping thing. But it's even crazier at places like Starbucks or the bowling alley or a gas station. So this whole let's ban TikTok thing has been gaining speed, gaining momentum. There's a bipartisan bill in Congress right now that has the support from both Republicans and Democrats to ban TikTok. We know that the federal government and the military has banned TikTok. Military people cannot have TikTok on their phones, and Department of Justice and most federal agencies no longer allow government employees to have TikTok on their phones. We've seen a growing number of states, saying this as well. Our state employees can't have TikTok on their phones. Nancy Pelosi is apparently pushing a bill. It's a $1.7 trillion spending bill, but they've attached to it a bill to ban TikTok. But we're seeing kind of mixed articles on this from the media. I saw a CNN article this morning that said, TikTok is too big to ban. But I'm seeing other mainstream media articles on why TikTok should be banned, and a few saying TikTok shouldn't be banned, it should be regulated. And recently, there's already a host of states banning TikTok, but Indiana is suing TikTok for collecting data on minors, and Indiana and Virginia have recently joined a number of other states to ban TikTok on government phones. I was talking to my buddy Jay Capola over the weekend, had a great discussion. Let me know if you guys would be interested in a podcast where it would be me and another podcast host kind of discussing things. You kind of get a little bit more back and forth and things like that. But one thing that we were talking a lot about is kind of labor shortages and, the current hospitality and restaurant industry. Can it even cease to exist? Every restaurant, chain restaurant, fast casual restaurant that I go to lately, there's clearly a shortage of employees. The level of service you're getting is down. People are struggling to attract employees. A lot of these businesses, over 50% of restaurants, couldn't pay rent in November. Something like 43 or 47% of small businesses couldn't pay rent in November. And my buddy Jay Capola had brought up, he said, with the ability to do Instacart and Uber Eats and just kind of the entire gig economy, if you're a teenage kid or even a college kid, are you going to go to, a part-time job at Steak and Shake that's not going to pay you very much money, and you're going to have to work nights and weekends, and it's going to tie up your life and tie up your schedule? Or are you just going to drive for Uber or Uber Eats or sell some stuff on Etsy or sell on eBay or take up some type of side hustle? After the Mexican beer cough, we learned that upwards of 80% of people in the hospitality and restaurant industry didn't want to go back to that industry. And now a lot of the people who would have worked in that industry, i.e. teenagers, college students, etc., a lot of them are choosing to work in the side hustle industry instead. And so maybe having 7 Chipotles in your town, or having 3 TGI Fridays and a Chili's in your town, and 4 Applebee's in your town. Maybe there just aren't the employees out there to sustain all these businesses. And seeing as how a lot of these businesses can't pay their rent, maybe there's not enough customers to support these businesses either. And we're not even in the downturn of 2023. 2 kind of Gen Z articles. We talked about one yesterday. In yesterday's video, it was Gen Z isn't tech savvy. We'll talk a little bit about that. Gen Z is also realizing their digital footprints could cost them their jobs. We had a recent article from the New York Post. If you want to give it a read, Google something about, Gen Z digital footprint costing jobs, New York Post, and you should be able to find the article. If I can remember to, I will try to remember to link to it. But Gen Z, they grew up with cell phones in their hand. Think about all the stupid stuff you did in middle school or high school, or even as a college student or young adult. In previous generations, this didn't haunt us for the rest of their lives. We all know, whatever you do on the internet stays on the internet. And a lot of Gen Z people are realizing that, companies kind of search out your digital footprint, and things that you may have said or done on the internet in the past may wind up costing you a job. As far as Gen Z not being tech savvy, a lot of employers and offices are realizing that Gen Z, they may be good at using TikTok and Instagram, but they're not all that tech savvy. And I was kind of talking to Jay Couple about this as well, and we were both reminiscing about, it wasn't that long ago that when you bought a printer, you would have to install drivers and figure out how to connect the printer to your computer. Now things are as easy as you buy a printer, you plug it into your computer, and it automatically installs all the drivers, and it just starts working right away. But a lot of these things that, years ago, took some finagling. You had to monkey with things. I talked about when I wanted to get internet at my job so I could start a blog and start doing some online hustling things, we're talking, years ago. But it wasn't as easy as just pressing a button on my phone, and now I have Wi-Fi to my laptop. I had to find some app. I had to download the app on my phone. I had to download the app on my computer. I had to constantly be tethered with my charger cable to my computer, and there were constantly glitches and problems with the app. It used to be you watch porn, you got a virus, you'd have to figure out how to get rid of the virus, you'd have to find the virus, you'd have to delete your operating system and reinstall it. But Gen Z, even though they are good with TikTok and Instagram and a lot of free apps and things like that, when it comes to really understanding and using technology, they're not quite as great at it. So Henry Kissinger came out the other day and said it is time for peace in Ukraine. He's calling on Russia and Ukraine coming to some type of peace agreement. I've been talking a lot about a YouTube channel that's really pretty interesting. It's called Will OAM or Will 0 AM. And he interviews a lot of foreign fighters who've gone over to fight in Ukraine. Now, the channel overwhelmingly is supportive of Ukraine and supportive of Ukraine winning the war, but they also don't bury their head in the sand and act like Ukraine is a perfect country like the media often does. And it's not only is it crazy hearing these stories, right? It's scary enough, it's brave enough to go to war for the U.S. government, where if you get injured, there's going to be a helicopter that's going to come and rescue you. You have air support, you have mortar support, right? Like you're very well supported by a strong military. When these people are going over to fight in Ukraine, there's nobody coming to rescue you. If you wind up getting blown up, if you wind up getting shot, you may wind up having to run 20 kilometers back to the nearest town. And hopefully they're not Russian sympathizers, and hopefully you can kind of get back to a hospital. I've been watching a number of these interviews, and there's some Americans who have gone to fight over there. One guy got his hand blown off and his shoulder blown up, and in the hospital, he was actually having to pay. He didn't have much money, but he was actually having to pay for medical supplies and for medical care. And when you think about the U.S. government has given upwards of $100 billion, if not over $100 billion to Ukraine, and they're not actually using it. They're not actually taking care of their soldiers who were injured. The equipment's going in the front door. Someone's taking it out the back door and reselling it. They talk about how they're being sent out to the field with only 15 rounds of ammunition. They're being sent out with malfunctioning rifles that can only put off 2 shots before catastrophic failures. They're talking about how U.S. soldiers being sent over there are basically being sent to the front lines as cannon fodder because they don't care as much about foreign people or foreign fighters as they do their own people. And so it's really kind of eye-opening. You hear a lot of stuff from people who are actually there, who are actually on the ground, and some people who are still over there, as opposed to this narrative that the mainstream media feeds you. And I think a lot of people only get the mainstream media narrative. But if you guys remember, like way back at the beginning of this, Adam Kinzinger, a politician from Illinois, he was tweeting images of the Ghost of Kiev, saying, "Go, Ghost of Kiev." And I think he was a former fighter pilot himself. But he was really rooting on the Ghost of Kiev. And it turned out the Ghost of Kiev was actually a photoshopped image, a photoshopped stock photo image of like Sam Hyde. And Adam Kinzinger had to take down that tweet and was kind of embarrassed. But a lot of propaganda coming out of this war. You only hear one side, which is the pro-Ukraine side. And it's Will O.A.M. Channel. Not only is it just interesting in terms of like if you like war stories and kind of interesting stories and crazy things, but actually getting a real idea of what's going on over there. Recently, the El Paso mayor has declared a state of emergency over everybody flooding across the border. There's that, what is it called, Title 41 or Title 44, something like that, is set to, I think the ban on it is set to expire. So what that means, I'm not super familiar with this, but I believe asylum seekers can stay in the U.S. while they're seeking asylum, whereas previously they had to remain in Mexico while they were seeking asylum. Well, we've seen the mayor of San Francisco, the mayor of Los Angeles, the governor of California, the mayor of New York City, I believe even the mayor of Denver, have all declared states of emergency over all the immigrants flooding in. And while it is good to help people, you can't let everybody in. It's kind of like when a Titanic was sinking. Imagine if everybody tried to climb on the life raft. The life raft would sink and everybody would wind up dying. So unfortunately, you can't save everybody. You can't take everybody in. And even a lot of the mayors and governors of these very liberal states that before were calling for sanctuary cities are now realizing that their cities are being overwhelmed. Sam Bankman-Fried has agreed to be extradited to the U.S. I believe at first he was going to fight extradition, but it only took 4 days of sitting in a Bahamian jail for him to kind of change his tune and decide he wants to come back to the States. What do you guys think is going to happen with that? I saw, who's the guy, Farmer Bro, Martin Shkreli. He has a pretty interesting YouTube channel / podcast, and he was kind of going through like the sentencing guidelines, and he was saying based on what SBF did, based on the size of the crime, based on the number of victims, based on the amount of money stolen, based on how he went about committing the crime, according to his sentencing guidelines, he's looking at life in prison. Now, if he could recover some money, if he could snitch on some other people, maybe he'll get a lighter sentencing. I highly doubt that like a white-collar criminal and somebody as connected as him is going to wind up getting life in prison. But we'll see what he winds up getting. And I'd love to hear your guys' thoughts and predictions. So drop a comment down below regarding that. Okay, now before we get into more bad news and doom scrolling about the economy and job losses and holiday bonuses being cut, I will say last night I had to go to a funeral. And as I was driving there, I passed by, you guys may or may not be familiar with a mall called Oakbrook Mall. It's Oakbrook is a very nice upscale suburb. They have a really nice outdoor mall, kind of all luxury stores. It's not quite as nice as like the North Shore suburbs, like Winnetka and Northbrook and some of those, but it's a very, very nice suburb. And I was surprised to see that the mall was packed. So even though we talk about, Black Friday was kind of a flop, malls have been empty, the number of shoppers out there is down from previous years. I was kind of surprised to see Oakbrook Mall packed, but again, this is a very upscale town, and this is a very upscale mall. Well, we have been talking about the luxury recession, where, basically wealthy people are going to start cutting back. We have heard that more wealthy people are shopping at Aldi and discount grocers as opposed to Whole Foods. But it does seem like the wealthy people out there still have some money, because the mall was packed like any other Christmas. Every parking spot was filled, and I saw people actually circling the mall looking for spots. So that's one piece of positive news. But in terms of negative news, Goldman Sachs has announced that they're cutting bonuses by 40%. They're also laying off 4,000 employees. Morgan Stanley has cut 1,600 jobs. Too Simple, a self-driving trucking company, has laid off half of their employees. Cisco announced 4,300 layoffs. Denver-based Sondermind is laying off 15% of their workforce, and the layoffs continue. One type of article that we're seeing a lot lately is, it's cold to lay people off before the holidays. Though I have been seeing some people make the case it's actually kind of better to get laid off before the holidays. On average, Americans take on about $1,500 in credit card debt over the holiday season. And I guess if you get laid off after the holidays, maybe you just took a vacation, maybe you spent a bunch of money on presents, and you were planning on kind of catching up on those payments after the holidays. By laying people off before the holidays, maybe you kind of budget a little bit better and cut back a little bit better. Layoffs are never good, but we're starting to see a lot of layoffs before the holidays, whereas companies traditionally would maybe try to wait until after the holidays. So a lot of people are saying that signals how bad things really are. The Dallas Fed has come out and said that home prices could plunge another 20%. Any of you guys in the market to buy homes in the next year or two would probably be excited about this news. 20% seems like a lot, and granted, housing has already come down a bit. But when you look at how much housing surged over the past 2 years, even another 20% haircut in some markets wouldn't even take things back to pre-Mexican beer cough levels. It's kind of crazy. People are like, I wonder why people aren't buying homes. Interest rates are up, but home prices are starting to come down. When I look at homes, I'm seeing a lot of homes that somebody bought in 2019 for $240,000, and they're still trying to get $350,000, $400,000, $420,000. So even though home prices have come down, you're still seeing homes selling for $200,000 more than they were 2 years ago. And so I think the housing market has a lot further to fall. I don't fully understand how mortgage rates are calculated and wind up working out, but it's interesting that for the fifth week in a row, mortgage rates have fallen. How are mortgage rates falling when the Fed continues to raise rates? I've heard a couple explanations for this. One is it's based on the bond market. Another is that banks are just willing to kind of cut into their margin a little bit to try to stir up some demand because nobody wants to buy homes at these interest rates, as well as with housing still at the levels it is. I saw a story on Reddit the other day, and I think we're going to start seeing a lot more stories like this. Some guy living in Seattle, obviously probably had a good job, bought a $1.2 million home. Well, he was a victim of the recent tech layoffs. He had spent most of his money and most of his savings buying this home, and he's lost his job. And now how is he going to keep up with these house payments? He's likely going to lose his house, and people who bought a couple years back, they probably still have quite a bit of equity and could sell, walk away with some money, and maybe move to a cheaper cost of living market. But people who have bought in the past year or two at peak highs, the market has already started coming down, especially in markets like Seattle, and he's already down 20% on his house. So the idea that he could sell and walk away, that's not a possibility either. I think that's kind of all the news that we got for you guys today. As always, if you guys see interesting stories that you want to have me talk about or mention in these kind of daily rundowns, drop a comment, let me know about the story, link to the article. If you guys have anything else to add, always interested in hearing your thoughts, comments, and opinions, so drop them down below. If you enjoyed the video, please give it a thumbs up, and if you're not subscribed to the channel, click that subscribe button down below and ring the bell. As always, thanks for watching, and I'll catch you guys on the next video.